to Intersekt. You are T minus 120 minutes from drinks. One laugh. Good to know the rest of you are going for a cup of tea in your rooms after this. Chamomile, so you can be back here 10 a.m. tomorrow morning. I'm not expecting any of you to be late, and I want all your voices to be working just fine. Well, let's bring it home and also delve a little bit deeper into part of the conversation we were touching on in our previous session before afternoon tea. Protecting your customer. How can you prevent scams in today's digital world? We heard the Assistant Treasurer talk about it, the man with the plan for scams, earlier today, and it is front of mind for the government, but of course for regulators and for everyone else. And as the rapid growth of real-time account-to-account payments and digital interactions accelerates, so does the frequency of scams. With the global peer-to-peer payment market projected to reach US $9.87 trillion by 2030, and $486 billion of losses from scams globally in 2023. I kind of feel like I'm in the wrong business. The stakes are higher than ever. So how can you help your customers? Because as we mentioned earlier, nothing makes them happier than you as a business being able to save them from themselves sometimes. So in this, we're going to talk about anti-scam strategies with multi-layered automated risk assessments at various points on the customer journey, from sign-up through to transaction, to achieve this balance. To do that, we've got the fabulous James Civic joining us, and from MasterCard, and Simon Costello, CEO of Frankie One. Simon, James, bring it on. Save me from myself. Give him a big hand.
Well, thanks all for joining today. Yes, as I said, I'm James. I work for MasterCard, specifically in our services sector. So I guess just as an introduction, obviously, scams are a big topic. Big reduction last year, down to 2.7 billion from just over 3 billion in 2022. So things have gone, I suppose, in the right direction. We've seen a lot publicized, especially in the ACCC reports. It's been around some of the, I suppose, the initiatives that have taken place, formulation of the NASC, things around confirmation of payee. On the sadder side, things around like debanking of crypto exchanges, and other things and the like they've kind of gone through. But rather than focusing on, I suppose, like the transaction point, and at that point, I thought they would have a conversation more around how we protect the ecosystem more broadly. And Simon, what are your thoughts on what scams are, I suppose, in Australia in these current times?
Yeah, super. So, very topical, as you mentioned, and there are a number of different scams that are taking place. About 3 billion, as you mentioned, and has sort of gone down maybe sort of 10%, in the last sort of 12 months. But broadly, what we see is we see two types of scams. One is social engineering, where it actually is the individual transferring money to a foreign source or a scammer. That is very difficult to identify and very difficult to mitigate against. And then you've got the other variety. The other variety is actually account takeover, where they'll actually take your name, date of birth, address, log in on your behalf and transfer money outside. That's probably for financial institutions an area where we can mitigate, and there are a number of different tools and different ways to mitigate against that.
Yep, sure. I guess I was asking questions to the general audience. Has anyone in the last month or so received any text from one of your financial institutions or toll companies to say, you are due a bill in the next kind of 30 days, please pay this through? Anyone? Hands up. Oh, perfect. So everything that we've kind of seen that's been announced in the reports, around like SMS ID registration, that is clearly not worked too well. And that's around I suppose the education piece for users. Did anyone actually click through that actually put their hands up then? I'm glad that no one put their hand up there. That's all good.
But I suppose people can see, there was around about 90 to 100% of people here have been exposed to, whether it be text messages or phone calls, someone with a very strong foreign accent recommending that you pass on your account details. But it's happening to every single person here. Was that in the last sort of 4 weeks? You could imagine that is happening at scale across the entire country. You could imagine some, like your grandparents, etc., receiving a text message from their bank to click in, to log in and actually transfer money. people are susceptible, clearly. It is happening, it is rampant, and about $3 billion is sort of taking place. So it's pretty material.
Yeah, so I guess getting more to the meat of it. So as Frankie One, so you aggregate a lot of services within this, and obviously you've got a lot of experience across many, many industries, especially in fintech, financial institutions. So what are you thinking, or where are Frankie One particularly positioned to uniquely kind of address stopping these scams from happening in the first place? So not even at the point of transaction, even getting these potential scammers from getting into the ecosystem.
Sure. And maybe even just to start with, if people aren't aware of Frankie One, we're an aggregator in the identity and fraud space. So there actually are hundreds and hundreds of different tools available in the market to mitigate against fraud, obviously to assist from identity, KYC, KYB, etc. But there are very fantastic tools, but they're sometimes point solutions. And financial institutions need to connect to many of these different solutions, use them at certain points. What Frankie One does is we've gone to some trouble. We've integrated over 350 different third-party vendors and data sources across 190 countries and allow our clients or financial institutions to select which is relevant to them. So in answer to your question, picking it up at onboarding or before it does get to the transaction scale, there are a number of different tools that financial institutions can use. So let's use the use case that we said before. Someone receives a text message saying they should log into their bank account. Assuming this is a fraudster, someone clicks on their details, and they'll pass on their either account name, password, bank details, etc. The scammer will take this information and they'll try to, what's called an account takeover scam. They'll take that information and try to log in as you. They'll probably redirect from an email perspective. They'll potentially provide a different phone number. So it's just a step through the process how our financial institutions can mitigate against that. First, we can do device characteristics. We can actually work out where country or what IP address they're actually logging in from. So it is logging in from, say, Russia as an extreme example. That should be quite straightforward to pick up. Two, the email that they're using. Personally, my email, the Gmail account is Simon_Costello@Gmail. It's very likely it is my email address.
Are you live streaming this so everyone can hear that?
Two, you can actually see how long that email has been around for. If it's obviously an extreme circumstance, if that has been created 3 days ago and it's _1345, etc. like that, more than likely a fake. I'm giving extremes, obviously. But what we're doing is we start feeding scores in, and we start, or what we call signals. And we can identify, okay, is it likely that email is real? We can actually start working out the phone number. How recently has that SIM card been activated? Then we're also bringing in signals, as I mentioned, from the IP address, and we're gradually starting to learn more about this person. The next thing we start doing is actually layering in different tools, which is more of a biometrics testing. Now, if this person is logging in to their bank account, the way that you type on your keyboard is unique to you, a little bit similar like a signature. You'll maybe Simon, S-I-M, quite quickly, O-N might be a little bit slower, but that is consistent the way that you log in. And what we're doing is we're constantly tracking this across as you log in each time to work out approximately how you do that. So when a fraudster, maybe a bot, cuts and pastes the word Simon, all of a sudden fraud scores will start getting triggered. And so we can actually start gradually building up an idea of, is this person really you? And so these are, I suppose, some examples, and what I would argue is, as you can probably tell, I've used maybe 4 or 5 different fraud tools that can be used to identify, is this person actually yourself? And hopefully, different financial institutions, namely banks and the like, are utilising some of the tools that are available out there to mitigate.
I guess from the experience, is there a particular number of tools you might recommend, what you've seen, maybe in Australia, maybe other markets as well, that's typically quite effective to help with the prevention, or even if it's just like putting people off getting through that detection?
Well, let's just use the example of signing up a bank account. Most people would have signed up a bank account, and you'll notice you pass on like your driver's license. But what you'll notice is if you drop your driver's license in the street, you'd have my name, my date of birth, my address, and you'd have my government ID document number. You can open up a bank account today. Very straightforward, just by dropping your driver's license. But what's happening in Australia, Bankers Association has mandated that all banks, part of the Bankers Association, will actually start bringing in biometrics. So not only do you need to pass on your driver's license, passport, etc., but also you'll need to be taking a photo. That is to confirm, obviously, you are you, not just have the driver's license. So that's something that will come in effect in Australia, and if you, you'll start seeing that. Pretty much majority of banks will be introducing that by the end of this year. As far as other countries and the like and what types of fraud, it does differ. For example, in the US, we see a lot of synthetic fraud, which you don't get as much over here, and it's more of a background because of social security numbers. They use a unique identifier, etc. But also then you also see different types of fraud in different sectors. So what you see in banking is slightly different from what you see in crypto. And so I suppose it does depend a little bit on geography, sector, etc.
Yeah, and I guess one of the unique positions that you may be in, and even Mastercard are in that as well, is having access to a lot of this data, especially aggregating it. I know there was a roundtable yesterday in relation to sort of consortiums, networks, I suppose the risk and the aversion to creation of a potential like a honeypot or something like that. Do you think that having that cross-industry collaboration, does that give you, I suppose, a unique insight? Because you're not just working with traditional finance, you're working across other pieces as well. Is that what is really required within the industry or within the entire market to kind of help alleviate some of the potential?
Yeah, so fraud is generally the one thing I've ever seen in any business model where competitors are actually willing to sit down with each other and work together. Everybody wants to fight against fraud, and the more people collaborate, the better outcomes we can get. So yes, I absolutely think syndicates and the like getting together would be advantageous. We have, in Frankie One, we have a bit over 200 finance institutions that use our service. Obviously, some of our bigger clients are the tier one banks. About 60% of the Australian population does run through Frankie One now. And it gives us, as you could imagine, a reasonable sort of understanding of what's happening. Now, I think where we're starting to evolve is we can actually start seeing a fraudulent customer in one bank or one finance institution, and we can actually alert in real time now to inform you going, hey, we've seen a bad actor, Bank B, Bank C, or finance institution or FinTech, just letting you know that is the same characteristics and details and IP address, etc., and we'll let them know in real time. So I think, to your point, the more collaboration, the more real-time alerting we can do, the improvement on fraud rates.
Yeah, and even, I suppose, you mentioned about the Australian Bank Association requiring these pieces around biometrics. I suppose a key call out when I said that report was in relation to debanking the crypto space. The fact that, I don't know how many percent it's going to be, but if you wipe that off, how much is it going to contribute towards the overall scam total? You may have that demand, but with you being positioned in this manner, and I suppose that consortium, is the crypto exchanges, are they going to be able to take advantage of that, where the traditional finance have kind of kept that to themselves previously because they just have the transaction data, or they say, no, we own that customer. It's not necessarily for everyone else to utilize. So how would that, is it working through yourselves that those exchanges may be able to be more successful and so as gain more trust within the wider ecosystem and through the news more broadly?
So yeah, I suppose crypto companies have been a bit of a target, I think potentially unfairly. I think it's somewhat widely known that a large part of the crypto companies have been somewhat debanked in the last sort of 12 plus months. Obviously makes it very difficult for these companies, both international and also local players. To some degree, it has reduced, or you could argue, fraud from a whole national scale has been reduced about 10%. But I suppose even if you wipe out all crypto companies, you've still got 90% of the fraud exists. So I think it's a very heavy-handed sort of approach, and I don't know how the longevity of that, now it's been done, but you still got 90% of the fraud sort of exists.
Yeah, no, agreed. And I guess that is something that the wider industry, especially with the audience kind of in the room at the moment, there's something that's being addressed ongoing, especially as regulators have more looked at enforcement rather than regulation to kind of assist with. But yeah, I'd like to kind of suppose touch on your piece around those overseas markets. So you obviously work with a lot of global companies, not just Australian. How has, I suppose, working with your own ecosystem, your own, I suppose, global consortium or database around things, has that helped you and some of those fintechs that you work with, has that helped them with any of the expansions into other markets, especially when the risk profile is, I suppose, more is at a higher level when they don't know that market so much?
Absolutely. Have we been able to assist them from a global expansion perspective into different regions? Absolutely. When you have an Australian customer launching out into the US, absolutely can provide guidance in relation to what they potentially will foresee from a fraud perspective. What you, as I mentioned, what you do in US versus what you do in Australia will be different. You'll use different vendors, you'll use different solutions, you'll have a different flow. You want to protect against different things. And yes, sometimes we do act as a quasi sort of consultancy from the, I suppose, the broad range of fraud and geographies we focus on.
Yep, and as an aggregator, so from that experience, just for disclosure, so we work with yourselves for some of the solutions, especially around the identity piece. How important has that been working with some of those global vendors, obviously outside just MasterCard, to support, I suppose, the general regulatory needs of those end customers?
So, yeah, as I touched on before, I think absolutely, I mean, having a partnership with MasterCard and best-of-breed solutions across the world is critical for financial institutions to have access to these, to be able to assist themselves in what to do. Our role as an aggregator is to provide it in a super easy to consume, easy to use, easy to switch on. And so when you do get hit by fraud, you want to be able to switch on a solution more so than scurry around, research the market, integrate quickly, somehow put it into your flow. In fraud, it's real time, and you want to move very quickly. So I think having access to best of breed at your fingertips is quite important.
I suppose also given the speed at which scammers, they react. I mean, I think we were talking before this, and it's not a scam so much, but when the CrowdStrike outage happened, 6 weeks ago? Even that night, I've worked with some merchants whereby their consumers were contacted by the bank. I won't say which bank they were particularly referencing, but they were saying, we're your bank, you can see on the news that actually you've got an outage at the moment. We're going to send you an OTP via the text. This is going to allow us to get back onto, get your open banking, your bank account re-engaged. What that was actually a transaction code, and I think the people purchased like a 12 grand flight for the next day. So the fact that when you're looking for best in breed, you need that real-time assessment as what you were talking about before. For someone that is, for a criminal that is reacting to something that's ongoing within 6 hours of being in the news, you mentioned around elderly relatives or those that are more vulnerable to the scams, you really kind of need to look to that piece. And so are you also looking, I know you mentioned around doing the onboarding, the regulation. Are there other areas that you're expanding into to also look to, whether this be like transaction monitoring? And what kind of fits in there? Is it the same type of solution that you're using for the onboarding that may potentially go into transactions as well? Or where's your plans?
I would say broadly, we sort of look at the world into 3 areas. There is the onboarding piece, and I would say there's what we call login, so just actually logging into your account. And then the third I would actually put as the transaction monitoring. When you do onboard, as I went through some of the signals that we can, what we call graduated onboardings, we're doing slow, small sort of pieces of information, cost effective. We're starting to do dynamic flows. We're starting to work out, what we need to do on the onboarding side. We're bringing that back up, and we have a score from an onboarding. Then when you re-log in, we're making sure it's the same IP address, it's the same biometrics. If you were to transfer $10,000 or plus from one account to another, we actually might get you to take a photo. And so that's from the login sort of perspective. And then, as you've accurately said, then there's also the transaction piece as well. And so again, the scoring and the signals should also go back into the same score. And what you should be doing is you're, one, re-verifying it's the same information, it's the same trends, etc. But we use McKinsey's CRR model, so all those different signals should go back into one score, and that should be dictating basically certain actions and what to do. And and as far as, I was going to say, the product roadmap, etc., from our perspective, yes, we offer all three. And from an end-to-end perspective for a financial institution, I think that is really critical to have that single pane of glass to understand from end to end, as I said, all those three sections, to be able to understand where the risk level is per customer.
Yeah, agreed. And I suppose to touch on other pieces, you mentioned roadmap. So, and even with the speed around things. So AI is a pretty prominent subject within the market just because it's just the buzzword. And everyone generally meant Gen AI because everyone's been using machine learning, AI for 5, 10 years. How have you implemented that to kind of cross that entire ecosystem? Is that something that kind of comes into future plans as well? To really kind of like look to prevent that, to protect those businesses from any liabilities, and to obviously ultimately protect those end consumers as well.
AI definitely a very hot topic right now, but I'm obviously one of those people that are on the bandwagon that I generally think will have a very material effect on the world. Yes, LLMs that you're talking about, but also starting to move into agents and actually proactively having a very material effect on the world and also financial services. For ourselves, I can speak to, as I mentioned, we have a decent amount of percentage of the Australian population running through Frankie 1. And when you do have a huge amount of data across varying sources, then obviously the data actually becomes quite valuable. What we've found and what we're releasing is we are putting an LLM in the front for our sort of customer dashboard. And then you can actually, through natural language, you can query your own data, which is very interesting. So actually, hey, what is the fraud rate? What is happening right now? Or when you come in the morning, you can imagine a compliance or fraud officer, he actually comes in and goes, okay, this has been happening in Spain, the DBS has been down, this is your highest profile risk we highly recommend to start working on. We've actually actioned a whole number of these different pieces, you're welcome to look at it. I would actually argue AI has the potential to have a really material effect for a fraud and a compliance officer. And if they are focused on the right things, hopefully they can get to it faster, quicker, hopefully mitigate fraud. And then in addition to that, certainly something we're doing at Frankie 1, and I'm sure other firms as well, but when you've got 200 plus different financial institutions, you are super interested to find out, how am I performing versus my peers? And you want to start working out, like, if I'm CBA, how am I going against the other tier 1 banks as far as onboarding or on fraud or on transaction monitoring? And you want to start seeing, hey, what are you saying, the trends that you're seeing in your portfolio versus others? And I think LLMs do an amazing job for data interrogation, but also do some of that analysis as well, and actually can provide you back insights and saying, hey, we've seen this trend, maybe you want to look into this further. I would argue, obviously, we're very early days and there's already a huge amount of potential and hopefully some exciting things to come. On the flip side to that, on the fraud side, it now also is easier to make fake identities and the piece. So you absolutely, it's going to be AI versus AI and everything's going to be sort of rising up at the same time.
And I guess actually that's a really good point. I think it's something that we've seen quite prominent in the market, especially with those AI pieces. And you mentioned around the biometric from the ABA before, and you're just doing your general sign-up. The reality is it's quite a costly process. And if you've just got AI solutions, or even if it's just like a basic faker script or something like that, you can generate 100,000 identities just like that. And the reason behind that is not necessarily to actually get any of those solutions through. It's actually just to burn budget. And especially like when you're a startup or anything like that, that capital is quite a big piece around it. So it kind of feeds into that layered approach that you mentioned and some of those graduated onboardings.
Just actually to add to that, we actually had a client last month, which is the first time we saw this fraud. But to sign up, I'm sure any financial institution here, you'll have a sign-up page. What this fraudster was doing, or bot, was actually going in, putting in fake businesses, and running different ASIC and UBO reports just over and over and over again. And it was like a $150,000 bill, in the space of sort of 24 hours. Now, this was just draining this customer of funds. So I don't know what the fraudster was trying to do, but it was actually really trying to financially hurt this customer. And so that is an example, I suppose, when you say it's expensive, and when you start going to KYB, not even just the biometric side, there are different attacks that do happen.
Yeah, it's definitely something we have seen, and so that's why going to that graduate approach is they're just trying to get the CFO offside. They're saying, actually, turn this off, because ultimately what it comes down to is then all these prevention solutions you've got that are further down the line, that are really, really sophisticated, it's been undone because we're saying, actually, it's too costly. It's not cost effective for us to proceed with any more, and therefore it opens it up to a considerable amount of risk kind of moving forward as well. What's that, 3 minutes? Okay, sorry. Did one about that. But yes, so that's why I was interested in understanding about that multi-layered approach. Is there a particular one that you found to be the most effective across the last year or so from experience?
So it's always tough working out what is the single best way. I think biometrics it is slightly cumbersome. I'm sure anyone here is familiar. We've had to take the photo of yourself and it's not perfect, or the photo of your ID and it's kind of a bit clunky. It's not the best experience. It's expensive for the financial institution. It's not the best experience necessarily for the individual signing up. It does have an impact though, for, as I mentioned, account takeovers and the like, because the person is present. But I think each institution, each geography is slightly different. I think ultimately everybody will need some sort of like layered approach. I wouldn't recommend you need all the different tools that I was referring to. It is very much a risk-based approach, and obviously layered. So I would recommend, today's obviously panel is very much about how do financial institutions protect against scams. What I would recommend, have a look in the research in the market. Obviously we can assist you, but there are others as well. Work out what's available to yourself. It is always slightly unique, but I think things hopefully are getting more attention given the amount of scams that are taking place and the regulatory bodies being set up, etc.
Yeah, and I guess you'll probably start to see the scam vectors change. You mentioned the account takeover piece before. I think the social engineering one is the hard one to detect, and there's been a lot around, even if you do a biometric, well, if you're being scammed by someone because it's a romance scam, they're saying, yeah, I know it's me. I still want to send this through. But are there those other potential solutions whereby the criminal, whoever it is that is actually kind of scamming the person, shouldn't have even been allowed into the ecosystem in the first instance? And that's where I'm thinking with social engineering, yes, that's an education piece, but actually, why are the bad actors even being let into the system in the first instance?
Sure. You're right. I find it is a bit harder to protect against. It is usually an education piece, and you would have seen the banks recently talk very much from a scam perspective. This is very much what their first port of call is. There are some potential other factors, the bank, informing them. I think we spoke earlier in relation to what Monzo do, let you know when you're on the phone, etc. There are some factors. It is technically, it's quite involved for these financial institutions to do so. I think education ultimately is the best for a broad scale for those sort of fraud.
Agreed. I think we're being called off stage right now. Just as for anyone else that's kind of interested to talk to us, I've got a booth back in the exhibition hall. Come see the Mastercard team. Simon will be floating around as well, so please come talk to us afterwards.
Thank you. Thank you so much to Simon and James. Yes, you can't scam any minutes off our next panel, but thank you so much. So while we were sitting there,